My 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, tonight we're going to talk about something that I've seen very little talk about, but the budget surplus that occurred in June. Let's get into tonight's video. One second, having a little issue. Welcome everyone to the Kendall Report. So it is Sunday night. Got a fair amount to talk about. It's very interesting. I ran across something just browsing the internet this weekend, and I saw that I was going through some stats, and I found out that the U.S. had a budget surplus. Yeah, you heard me right, a surplus. So they brought in $27 billion more than they spent. Guess why? Tariffs. The tariff money offset the entire deficit. So we're not paying, we're actually paying things down a little bit, right? So why isn't anyone talking about it? Because Trump did it. The last time that anything like this happened, 2005. So think about that for a minute. So Trump tells us that we're going to be able to, excuse me, I had a little technical issue. It's telling us that we could run the whole country on tariffs. Well, and what are we reacting to right now? We're down 24 handles, no big deal, 3/8 of 0.4%. And why? Because Trump's tacking on 30% to a bunch of folks. I think Mexico's in the mix this time. And, I talked about how we didn't respond at all. The markets were numb to all of these different elements. And here we go again, right? We're getting the reaction is smaller and smaller. And I think maybe like I said, I do think we're used to it. But also, well, now if this happens again in July, which it's possible that it will. Oh, the other stat, I had another stat here, is that last year, the same month, $71 billion deficit. So difference in 1 year is pretty amazing, and a different person running the country. We actually don't know who was running the country before. It's crazy time we live in. So I think this is significant. I was really impressed. I just ran across this data point. I researched it. Goodness, this happened in America. So Ray Dalio and Musk and all these guys, I've been kind of trolling a bit because they're telling us that, the end is near and it's going to blow up and it's not going to be manageable. If you listen to Ray, you got to shake your head though when you talk. So anyway, I'm sorry. The guy really annoys me. It's crazy. He's my new Peter Schiff. But the point is that we are seeing some evidence that maybe the tariffs do more than cause inflation, which we also found out that's not actually happening either. So we're coming in here as we come toward the end of the month. We got not this week, but the following week, we got to deal with Mr. Powell and his group to see if they can come up with an answer to do nothing. I believe that will be the case. No reason to talk about it right now. We'll go into it during the week. But there are some pretty good numbers. I've got a list up here above. We've got CPI coming in on Tuesday. Wednesday is PPI. We've got industrial production, which is a reasonable report to pay attention to. That's expected to be basically flat capacity utilization. And then we have retail sales. We come into Friday or Thursday initial claims. and there's a couple more reports coming in here, and something else is going to start to happen as well. So we got claims, continuing claims. It's still around the same number, 1.965 million, and then we got housing starts and building permits coming up. So on Friday, but the results of what I think we're going to see overall in the markets are going to be what I talked about a couple of weeks ago. Is all the momentum is fading. The only market that is really moving right now is Bitcoin. It's broken out, and there's a lot of flow going in there. So this is good. I've been really concerned about that. Go through those details here in a few minutes. But the result of what we're seeing isn't what we're being told, which is, oh, surprise, what else is new? You know, everybody, Trump's tariffs were going to ruin the country, and we're going to have massive inflation, and none of that's happening, you know. And we see that a lot. You know, I've told you folks probably 50 or 100 times over the last 5-6 years that if you want to be good analysts, just fade all these people, especially like the Morgan Stanleys, Goldman even. Goldman used to be respected. They're as bad as the rest of them. None of their research is good. You have to understand, and I had the privilege, I would call it, to work in 2 different research departments, Merrill Lynch and a small regional firm that I was a head financial analyst with. And all of this stuff is marketing. Every report you see that says what the market's going to do is actually not a market report, but a marketing report to try to get inventory, to put some kind of twist on the business, which would be the Morgan Stanley or the big houses where they want to see, where they want to push products and other things and themes that they have going within the companies. You know, people forget that broker-dealers are companies that want to make a profit. And there's definitely a big time bias, and there's also, you know, they forced all of the research firms to acknowledge if they own the stock when they were putting research out because of the conflicts that are in there. So, you know, and this is the other thing. I'm kind of a segue into where I'm going here, is we've got earnings coming out. So same thing that always happens on earnings is what? The companies on the forward-looking statements that they made in the last quarter were understating, and all the analysts understate. So then when we get the earnings, we'll see somewhere between 65 and 75% of all the earnings will come in better than expected. And you know, this is kind of the game that goes on Wall Street. Just it's kind of a over and over and over. It's like Groundhog Day, right? If you think about it, you know, it's always going through this same cycle where, you know, we get the same expectations and all the rhetoric around it. And it's the same thing with the Federal Reserve, if you think about it. And it's gotten to the point, it's so bad. I'm trying to figure, I was thinking the other day, and just, was it different back 20 years or 30 years ago? Was it any different? I don't have an answer. I was trying to, hopefully I had some great insight, but I think it's been the same game all along. It's just smoke and mirrors, and, you know, try to keep the markets going up and up and up, and they just kind of pump them every quarter. And then when there's sometimes we get a negative cycle, so maybe that's why, you know, stocks only go up, right? If you think about it, you know, you've got this 6%, I forget the exact number, 6.2 or 8 compounded rate of return for the last 30, 40, 50 years. And why is that? Because it's always being manipulated in this fashion. They want you to buy the mutual funds, the ETFs, so they can collect the fees and you make money, and they don't want you to get out because they can't make money if you get out of those kind of products that charge fees. On stocks, I'm not sure anymore they care. You look at how many ETFs and products that are out there that all of us buy, and and trade and all that. These guys are all sucking on the teat. They're all making money on that. So it's a monster game. We kind of know that. Last stream I did, somebody goes, "It's just a casino." Yeah, it is. One of my old mentors used to always say that the only difference between going to a casino where they used to wear the little caps with the clear visors is that we wear suits and ties instead of the clear visors. And he was right. Whoever said that last week was right. But this is the game. So we're about to go through the cycle one more time. So so it'll be interesting to say the least. So I'm going to do. I'm not sure there'll be some other things that come up. I'm sure, but I'm just looking at some notes over here. I think what I'm going to do tonight, I'll try to keep it up. Sorry for being a few minutes late. I guess better late than never, right? So what I want to do tonight, I'll go through the normal markets maybe, that I flow through. I don't really have any particular themes that I seem to be tied into as I was looking at my notes. So we'll just go through the flow of things. We'll go through the database, and I'll save some of the comments there when I get there because there's no fireworks there. We're not getting the types of things I was hoping we would get if we're going to roll and markets are going to rally. Then let's set it up. So we didn't get a lot of that information here. I'm just So we'll go through the database next, and then we'll just go through the normal cycle. And I'll probably touch a little bit on the Dow and interest rates just to set them up for the week. And, like I said, we've got reasonable amount of data, obviously, coming CPI, PPI. I don't think anyone cares anymore. And there's no reason as we look backward in the rearview mirror to even worry about any of those things at all. There's nothing that seems to be inflationary. For the moment, for 1 month anyway, for once in 20 years, Trump balanced the budget, which no one saw that coming. I don't know. I've looked around. I haven't seen anybody even talk about it, like mainstream people. No one's mentioned. Maybe somebody will. Anyway, so let's go ahead and let me get set up here. Oh, the other thing I am going to do, I'm going to show you tonight. I'm going to show the setup on how to use Claude with the fact sheet. We're going to run them. I'll talk about it together. Getting very, very close to finally getting these out the door, so I'm excited about that. And I appreciate there's been some reasonable amount of sales on the indicators and the newsletter as well. So I appreciate all your support from everybody. It means a lot. And as far as there's a possibility that Wednesday there will not be a stream for Wednesday. And Thursday's questionable as well. So it might be a short week. So get the Substack. Today is the last day of the $80 special. So get that, kendallreport.substack.com. And then if you do want the indicators, it's kendallreport.com/indicators24. And I think as long as you go indicators, it will resolve to the right place. But indicators 24. So let's get into the database here and take a look at where we are. Nice. Okay. All right. So we'll start with the daily. We're at 75. We're seeing just a little bit of selling coming in here. We're seeing 900 sells versus let me just make sure. Yeah, I want to make sure I was on the dailies. So we're seeing 900. Was it almost? Yeah, just short of 1,000 exits and 185, 84 new buys. So we're seeing down to 75.90 right now. We were up a touch higher. If we look at the sectors right now, we have 10 of the 12 sectors And let's see here. There's only one of the sectors that is negative at the moment. And we're looking at reasonable amount of returns. We're long in the tooth on some of these. We've got basic materials is exceeding. We're also got capital goods. So we're starting to get long in the tooth. So once again, I've talked about this before in these cycles. We're seeing the sectors actually come out, and what we're seeing the sectors get to the end of their cycle. So what typically happens around there is we start to see some of the sectors sell out, and then we see more attrition on the short-term database, or 75, 90, number 68%, then 62 to 58. I would like to see that kind of rotation, like to see the market kind of meander, maybe trade down. We're what, 62 handle, maybe see 60 handle out of this thing, 61 and a half. We'll go through the technicals here in just a few minutes, but that would be a fairly healthy thing to do at this juncture. And so the way that if we just look at the backdrop that we're coming into now is we've got the earnings, we've got all the PPI, and then next week from Wednesday, then we deal with the Fed, right? So they're stacking all this stuff up. So this would be a good time to kind of grind and trade. So it should be a pretty good traders market, whether or not we have anything on the side of from the standpoint of getting any big negative stuff to come out here. I don't think that will happen, but we'll see. But let's go over to the intermediate database, and this was a bit of the disappointment from my viewpoint. And I talked about this on Thursday night as well. So let's go ahead and just zoom in here. So we're at 54%. I was hoping with us punching out new highs that it pulled some new stocks into the fold, and we got another round of buying on the intermediate base. As it turns out, we didn't. We got basically a rotation. We got 200 sells. I'm just rounding off here. And we got right at 270 buys. So we got a little bit. We were at the high 52s. Now we're 54.69, and it's unfortunate because I thought if we could get that traction at 58.62 number, then that would change the forecast or a lot of the forward-looking expectations going forward. We didn't get that, so a bit of a disappointment, kind of a yawn on that. And so depending on how we trade this week, and like I said, we've got reasonable news coming out. I really don't think people are that concerned with inflation at the moment, and specifically this report coming out. I can't imagine expectations are very dramatic at all there. And if we look at the rest of the week, other than we get, I think, bank earnings come out on Wednesday, I think it is. You get a bunch of the big banks. Those guys are going to be okay too. They get reasonable spreads on everything. There doesn't seem to be any stressors anywhere at any point. So in spite of all the news that you get from the standpoint of the what the mainstream media and the mainstream financial media is throwing at you, there's really nothing going on here, and it's pretty low key. Now the Trump tariffs at 30% on a bunch of these folks, it's not going to do anything bad. Guess what it's going to do? I was just talking to you about it. It's going to create a budget surplus. Imagine that. Somebody named Trump said that. And I've been pretty frustrated with a lot of things going around the messaging around the tariffs and that. But Scott Bessent actually said it best, and that was it. I just realized I had something on my screen I wanted to show you. So before we go on to the S&P, I'm going to backtrack just a little bit. We're going to talk about that surplus just a touch more, and I missed the mark on that. I didn't make good notes to make sure I did that. But the point of what I'm saying here is database is solid. It's not expanding. It's not shrinking. Everything's basically status quo. And we come into earnings, the beginning of earnings, and we've got PPI, CPI in the Fed meeting the last week of the month. So Q3 start so far has been neutral at best. So let me just see if I can go back to. I don't know if you folks really paid attention to this thing that I put out in Substack, but it's sort of interesting in that this is basically a history. This was up to the data that was out there. But if we go into the projections here, and sorry, I'm getting a text. But if we go into projections here, this was something that I talked a bit about, but I'll make it a little bigger here. This is, you can change these sliders, and I can change this so they go to 36, and you'll see this drop down by the time we get to 2036. I know that's a long time from now, but it looks like somewhere between 2031 and 2032, we're going to get down toward 100 GDP ratio at 100% compared to the 121 that we're at now. So is the debt an issue? Yeah, but if they continue this, and this is tariffs continue at rate, look what I have the tariffs set at 30%. But if you get to Substack, do this, because you can change the numbers. And you see as I change the number, the red bar is I go to 5%. If I go to 0 tariffs, then we end up, it takes all the way to 36. But no matter what happens here right now, what it would appear with some of the settings that we have in this model that I put together, you can change the GDP. These are all set at 3.5. You can vary these. So no matter what you do, though, is you will see that the trajectory of the deficit is going down. So it's somewhat interesting, but a lot of these are making assumptions. I think we're going to see GDP numbers much higher than what we have. And as I've been rattling on about this, because it's important, is the primary thing I think that's on a lot of folks' minds right now is, everybody talks about the deficit. No one talks about growth. No one talks about that. Scott Bessett's certainly went on about it. Trump's went on about it. Other folks have talked about the only way out of this is to grow out of it. And evidently, a lot of folks think this is possible. And then I always show you this. This is the 1980s. If we go back to the 1980s, the average annual GDP from 80 to 88 was 3.1, and there were two recession years, and there 80 and 82. So anyway, enough of that. I wanted to go back to that and just discuss that a little bit here. I am going to come on screen for just a minute. There's something I need to fix. It keeps erroring out on me. So just while I do this, hopefully this will fix what I'm dealing with here. But I just want you to really focus, and I keep telling you folks, don't just throw out some random numbers that you think is going to come, and that's going to be, that's how it's going to work. Use that model, play with the model, see if you can blow it up, and that's why I put it out there. I may make some things to that. Hang on here. That would explain. I'm just looking at something I need to kill here, and it's All right, that would explain everything. Okay. All right, so back to it. So let's go ahead and go through the normal market cycle that we do. And we'll run the fact sheet tonight. Okay. So a couple things that just right off the eye that I look at here. We'll go full screen. We're seeing look at the red dots are really starting to start to focus to the downside. And I've been talking about this, all last week. We keep bumping against these highs, but no one wants to be the bag man and really bid this thing up. So we've kind of made a new high, but we're grinding off. So maybe we're still going to get that rejection that I talked about off of these levels. I don't think it's drastic. The red dots here are forecasting out all the way down to the 40-day moving average, and that number is right now 60, 70, but that's kind of what I was talking about. Go to 61, maybe into a 60 handle would be really a good thing here from just to be able to correct, get the database to reset a little bit, try to get the cycle to reset to see if there is yet another upward swing. And I'm still kind of hanging on with a little bit here that I still think that Q3 and Q4 are going to be negative or flat. I still think there's a possibility for that. It is impressive with how things have held together, but we're not getting, we saw the big tech rally again to get the markets up to the new highs. And like I said, we've short-term database is sitting at 74, 75%. That's impressive, right? So there's a lot of participants in this rally, not 7 stocks. There's a lot of markets moving. There's some really good trades that I've noticed in the systems. But just looking at this chart, it tells you basically that things are going to start to cool off a little bit. This is the scenario that I've been talking about here. If you look at the dotted lines here, so if I'll just bring up the indicator, these grayed out dotted lines are the forecasts of where momentum's going to go. This is on a PPM1. So you're just seeing everything starting to pull back, and it should. I mean, look at this rally. Man, I just thought of something that I will, excuse me for doing this, but it's so important. I want to do, yeah, bear with me one second here. I saw something, this is kind of a segue, but it's related to what we're doing. I just want to remember, because I want to show this to you. There was a event when the crash of 87 happened. Okay, it was, we got, I think it was 32% in 4 days. I used to say it was 40, it wasn't. It was 32. The overall collapse there was around 38% during that period. But the recovery pattern that came out of the 87 crash, it was just, it was similar to what we did now. But this pattern, I'm sorry. This pattern here, and I'm pretty sure I got a snapshot of it. I know I got it, I have it somewhere, but I'll have to bring it up. But what happens, this pattern that you're seeing right here, let me just blow this up and let me get off screen so I can discuss this. This pattern right here, I was looking at a 5-minute chart, and it was exactly this pattern. I think it was from Friday. I'm going to do my best to try to see if I can go back here and see if I can. Bear with me a second. I'm sorry, this is a crazy segue, but those of you trading will like it. I'm just trying to get the scale so it's big enough. Yeah, this was it right here. I'm still trying to get the scaling right. But so unfortunately, I don't have another chart here. But we get this big drop, V, and then this grinding top. Okay, this is on a 5-minute chart. If we go back to daily here, I don't know what scaling is going to do here. Yeah. If we go back to daily, it's very similar pattern when you run it out. It goes back to in the 5-minute chart. But what my point is this is, I'll make my point finally. So thanks for your patience. When I saw the pattern, it just snapped. So back to 1987 for just a minute. What would happen, the crash pattern would recreate itself on hourly charts, 5-minute charts, any chart you saw. What is burned in, and this is really key. This is if you're doing TA and you're looking at patterns, these type of patterns this pattern is burned into all of our minds, and we will continue to respond to this pattern the same way. So you'll see these patterns on a 5-minute chart, an hourly chart. We get a big spike on any stock, anything. Okay, it doesn't have to be the S&P. In this case, I was just looking through a 5-minute chart. When I was looking at, I saw this matrix, I'll call it, right in the middle of the screen here. Where this thing just really kind of blew up. So watch for these patterns, and especially if you're a day trader, when you get these big spikes, that's to buy the dip pattern, right? And then it grinds up, so you know how to play these. You can usually stair step them up, but I just happened to see it. If I get a chance, if I can put like a 3-minute video together on the repeating pattern, but I've seen this happen before. In 2020, it happened. There was a couple patterns that came out of 2020 back in the day when we were all sitting around, had nothing to do, and locked in our homes. I was pointing these out, but just pay attention to when you get these big shock waves that hit the market. Look for those patterns to recreate themselves. Sorry, I needed to get that out there on the internet. Okay, so let's get back into this. So what I'm going to do here is we're going to run the data sheet together, right? So I've got Claude loaded up here, right? And I've got the, bear with me here. So once you have the file, you have to have, what you're going to need to use these new files is you're going to need to have a Claude set up. So I dropped in this, it's called a TSX file, right? And then we're going to go back over here to the daily, and you have to have all the indicators that I have on right now. PPM 123, PPM 200, all the WTARs, the market grid, all these numbers have to be in there. And I'm working on the final documentation for this thing. So all you have to do for right now, we're trying to figure out how to use an API to pull this in. We'll get that figured out. So there'll be updates to this file once I release it. But all you have to do is go in and you highlight this column. I'm on a Mac, so I'm doing an Alt-C to copy. Then I'm going to go back to Claude, and I'm just going to tell it to update using this new data. And then I'm just going to Alt-V. This is everything that's in this panel right now is that all the data from that file. It has the volume, the open, everything. All right, so all we have to do then is hit enter, and you'll see it start to run here. So hopefully nothing like a live demonstration to have it blow up on you, right? There it goes. So it takes about two and a half minutes to run a file. Unfortunately, it's pretty slow, but there's in this case we're building it from scratch. Once you run one, then the next one will run much faster. And so it's going to go through and it's pulling in all the data, all of that. Then it's going to do the calcs. There's some pretty deep stuff. I've worked on this AI for about 6 months. So it's virtual Bob. And I'll just come up. We don't need to watch that run the whole time. I guess it's okay. What I want, and this has been a big dilemma of those of you that have bought the indicators, is like, okay, how do I read them? How do I, where's the signals, all that kind of stuff. This is level 1. I have another project working right now that I have built I'm building in some really insane analysis of all of the indicators like I have here, but next level. But what I did with this was I wanted to be able to give you folks a sheet that you could use for trading intraday. It puts out a couple of day trades every day on the recommendations. You can also put out you can put weekly data, you can put 5-minute data, hourly data, 4-hour data, whatever you want, and it will set up trades and will tell you where all the key points are for the days and all of this stuff. So I'm going to do a very, very detailed data on this. So what I'm going to do while that's running in the background, hopefully I'll not watch it, but what it's going to do is to start to calculate where the ranges are going to be and all that. If we put a weekly file in, then it would look for the weekly, and there's going to be more of a swing trade that will be developed from that. So I'm pretty excited about getting this out into everybody's hands because it takes away that there's a lot of nuances with the PPMs and coming up with trades. I've seen some stuff on our private Discord, folks talking about this. So this is going to be solution 1.0. Maybe we'll even call it a beta solution right now, even though I've got a lot of work into. But what it's done is it's led down the trail. So I have this new file that I'm working on that is some of the stuff I've already seen come out of it. It was insane. And I don't have a high trust on it, but about 3 days ago I ran it, and it said within the next 3 days that you need to get out of the S&P because it's going to collapse. We'll see. But it was pretty interesting, and we're seeing some weakness, nothing big here. Like I said, maybe we get down into a 61 handle or 60 handle. But anyway, I just kind of wanted you guys to see that, and it looks like it has frozen. So let me. I'm going to put in all this. I'm just telling it to rerun. Yeah, sometimes, especially with a file like that on the first file, it usually runs pretty good. That was a copy of a copy, so there might be something going on there. But anyway, but back to the markets, all of the flows that we should start to see based on short-term database analysis is some backfilling, maybe getting back into a 60%. We should see everything start to flow in there. Let me just see why I kind of. What do you mean? Can the USA grow out of debt while at the same time that BRICS does business? Sure, why not? As far as I know, we're doing business with all the BRICS, right? I don't understand the question. So Zeke says, I was screaming recession crash for months. No, I was not. Zeke. Let's address Zeke. What I said was I was looking for some mild softness into Q3. Didn't see any big disaster. I never said crash, never said those words. Those are your words. And what I did, yeah. I love you guys. I really do. Yeah, so I never said that. People know that. What I said was I'm expecting mild negative numbers in Q3 and 4. Still am. I think it's still going to flatten out a lot. I never said it was going to crash. I said we're going to see moderate move back into support levels. Never used the word crash ever. You can go through my all my Substacks. I write 3,000 words a night. Zeke, how many do you write? I run $15 billion. How many dollars do you run? None. So yeah, I get it. But you know, the point is, I was not screaming that. What I'm screaming, and I still am saying, there's risk of economic slowdown. What have I said? Markets are not the economy, and the economy is not the markets. That's what I've said. As far as this recovery that's went on here, this is just ground up, just everybody. These are all the last of the guys that were short this thing, talking about the crash. We're still getting rid of those. We spent 3.5 weeks just trying to normalize all the short sales that came into that collapse down to 21%. So I think if you looked at the balance sheets of most people, everybody's even negative, or even though the market's rallying, doesn't mean people are making money. Only maybe the buy and hold guys are going, see, I told you not to get out. But the point is that this thing did grind up around the 200. I was talking about we could see a moderate decline, never even talked about a new low, no crash, no nothing. So I need to clean up Zeke's mess that he created there. But the bottom line is, you know, this thing is starting to go. Let's hope this thing ran. If it's still running, well, at least that's a good sign. It's still running. So we'll get this thing done. So if I get the right button, we'll get back to the right place. Yeah. So okay, let's just see one couple questions. Yeah, you'll run the stuff yourself, Green Garden. You know. Yeah, you'll be able to set up all that stuff. In fact, once you run a weekly sheet, you should be able to ask the sheet and go into Claude and tell it to define all of that stuff for you. You shouldn't be doing any of that stuff. Let's see here. Yeah, thanks guys for the backup. I just think it's funny when characters like that show up. Yeah, you know, I'll do IWM. I'm still working on a project there. So let's get back into the flow. I'm just trying to fill until we get this. I am telling you, that file I grabbed might have been the wrong file. Sorry, I got my Twitter account up. I have got all kinds of stuff going on here, folks. You got too many browsers running. Yeah, this thing looks like it's frozen again. I should have used a clean file. I'm sorry. All right. All right, let's move on. Let's go take a quick look at the weekly on ES. See if I can get some flow going. I should not have tried to do that live. I usually run those ahead of time. So we've got the weekly ES up here. Just trying to get I got all my scaling messed up. Okay, so on the 10, you can see the red dots on the weekly are trying to challenge the 10. And 61, 66 is about where this thing is likely end up in the next couple of weeks. That would be awesome. The sooner we hit that 61, 60, that'd be about 130 points below where we are right now. There's solid support there, but it does look like ultimately we're probably going to roll over maybe back to 6,000. It's just going, I think we end up going sideways. So the whole thing that Zeke was talking about, I was screaming crash. I was not. What I've been telling you is that we're going to come back into these ranges. the same ranges that we're looking at now on the weekly charts, is that we're going probably to stair step down. And I said it earlier, maybe a 60 handle, something like that. There's no collapse, nothing really out there. One of the things, and this number's been out there for a while, it is at 54.10. These green dots, that is a major pivot. We're not close to that. When we were up around here, around the 58, 59 handle, I said we could trade back. Didn't expect to see. I believe this was the bottom of the year, right at the down to the 200 week. I think the NASDAQ hit right on it. But these patterns are pretty solid. So these are definitely condor area. This area here for 4 or 5 weeks, I was telling you that you should be doing straddles. We got a rally up, and now you're in another straddle zone, probably coming on the way back to 60 or 5,900. I don't see any crash, no crash. But we are going to see a lot of loss of momentum and consolidation. So it's like, if you think about it right now, what is there to rally about? And if I'm still right about as we come through Q3 into Q4, see some softness, then that's just going to set us up for a sideways zone. I don't see any crash or anything like that. So let's go on to NASDAQ real quick. We'll stay with weekly for a moment. You'll see it's got a bit different pattern, but we're right at the first derivative. So those of you who've been around and have the indicators, you break the first derivative. If we go through here, which looks like it should happen next couple of weeks, that says that we will test the 10-week moving average over. When we break the projection here for it to break the second derivative, then is all the way out and towards the end of August. And then that tells you that we could potentially break the 10, then head down toward, at this time, we'll see the 21 cross over the 40, and we'll start to come into that typical wedge formation that goes between the 10, 21. So there'll be lots of support probabilities right now for a crash is certainly less than 10% at the moment, right? So we got to help Zeke out. He's confused. So all right, let's go ahead and let's do IWM because that was on request. Let's click that. 47 minutes. I've been going a long time. Yeah, this thing won't run. I don't know why. Yeah, I don't know what's going on there. So I wish I had ran it ahead of time. Sorry about that. And I grabbed a file I didn't have a lot of confidence on. But let's take a look here at the Russell. We're starting to stall. Same. It's actually got a little stronger profile on a weekly. We should hold this 40. What is this level here? 220 on this is the Russell ETF. Let me do RTY. So this is going to give us a little better profile. Same kind of configuration here where we should head back towards a 2171. All the indicator looks this similar. We're probably a week away from getting the signal to test the 10. So we still have a bit of an uptrend on the market grid going up to the upside. And then once that gets broken, same number around the end of October, maybe we take out the 10. So that upward 10 sliding up that angle of attack is going to be pretty good. There's no money in this index, okay? Not that you couldn't have traded off of the low. That's not what I'm saying. and it's all of them. Even though the market made an all-time new high, I still think maybe I'll do some Elliott analysis. I still think this rally here is a B wave, and there's this next wave down will come back into these moving averages. Same forecast on everything, so we'll get a retracement off of these values. I wouldn't want to be a new buyer at the moment. Most of the buy signals that came in over the last 4 to 6 weeks on the database. So there's been a lot of money made on the short-term trades. Intermediate trades still have a better part of 160 trading days to hold. So they're in for a much longer basis. And it's like 54% of the database. So 50-50. So 50% of the stocks are in trend mode, 50 are not. There's enough foundation there to keep the markets in a fairly solid position. Quick look at the weekly treasuries. We moved back up to 442 on the week. It looks like we're about to roll back in. My ranges, the extreme ranges is 4.5 to around 4.25 on the downside. I think we just stay there. There's a lot of talk about, Trump wants the rates at 1%, right, on the front end. And for the most part, I've been telling you this is kind of a broken record thing, but we're going to stay between 4 and 450. If we got to 495, that would be the peak in the bonds, and bottom in yields around 395 would be maximum. And even if my expectations are that we will get two 25 basis point drops, probably September, October, or before year end. I think it's pretty much everybody's expecting one, but I think there'll be two, and that'll put the Fed funds down to 3.25. And meanwhile, this will be hanging around 4.25, 4.5 on the back end of the curve. That is the perfect world. If that scenario happens, then I'll be quite pleased to, on IWM, I'll be more bullish at that point when that yield curve is pointed that way. Hopefully I'll get a chance this week. I'm not sure, to kind of write up a special report what I believe is happening with those stocks in the IWM. It's a zombie stock list, and when you go through there's some good companies in there, but there's a lot of zombies, and they're all due to the way that the yield curve is structured right now. A flat yield curve is not going to help the Russell very much. Most of the Russell rally that we've seen off of the lows has been a sympathy rally, way underperforming again. We're just not able to see. There's not going to be any leadership, and I've talked about this before, and just kind of tying this together with what's going on with the rates, is that the Russell is very tied to that yield curve construct, mainly because of the number of regional and small banks that are in there, that it needs to be able to drive that index as a whole. You got 2,000 stocks in that thing. I mean, it's a monster to move, even though, like all of them, it's highly weighted on the top end, but from a capitalization standpoint, but it still is difficult to move. And the reason why I'm still talking Russell and Treasuries, because of the yield curve construct. And when we get, maybe we see, I don't think we get it at the end of the month. I don't think we see Powell drop rates or do any of that stuff here. I don't think that's what happens. So let's do this, because I'm going to run out of time. Let me hit gold. And this gold weekly, this is what I called the caterpillar. If you notice here on the PPMs, we're not getting the type of scenario that is suggesting that there's any kind of big rally coming, other than the fact that we have this upward slope. I've shown you this chart it's fading just a little bit here into August, and then looks like it wants to accelerate back in September and in Q3 and 4. Maybe that's weakness in the stock market will propel that if that happens. But the bottom line is we still have this upward angle of attack, and this, like I said, I call it the caterpillar. You get all the peaks like this. I would suspect that there's one more contraction of the market grid. And then you can see also as we come into January, basically flat to seeing the momentum of the upslope start to dissipate a bit. We'll see if we can get anything more drastic than that, but it looks like the primary trend line is going to be the 21-week SMA, which is going to put us right at 32.33 is going to be like, that's going to be, if you're looking to enter more positions, that would be the point, because this relative angle should continue. All right, let's do Bitcoin because there's a lot going on here. So we did get, this is the weekly. So good news is right at this chart rolls over right at 8 p.m. when I come live. So what we're looking at here, let me zoom back in here just a little bit. We had a close at 119.35. If you recall, I talked about 121. We've got some fib targets up here. 134.21 is a target that is likely to be hit. But what's interesting is that PPM1 is still fading, even though we did that. Let me look at a number here real quick. Yeah, so we did get, for this last week, we got an RTX sell signal, which means Bitcoin should spend 1 to 2 weeks in a sideways mode. So it will be, should stay within the market grid range. So let's identify that. That's high end 127.8, typical 125.8, 120. So R1 is that 121 number I've been talking about. So that could be your number. On the downside, you're probably looking now at between 117, 114 as the range. So we should start to, it looks like momentum's going to start to fade a little bit. If you recall, going back about 3 weeks ago, I said we had 2 weeks as we come into July that we're going to need to break out, and we were able to that momentum and that strength was able to push it through. We still have like really strong momentum. PPM1 is at 1.38. That's a big number. That tells us that there is less than a 10% probability for the market to drop below the 10-period moving average, which right now is 108,950. So that's where you can do some buying if you're trading. You can look to do some buying off of that level there. All right, folks. Well, we'll come into the end of the show. I didn't get through everything. Apologize. I'm just looking to. Yeah, I don't know why this thing's freezing up. I have no idea. It just won't complete. I grabbed I don't think I grabbed the right file. I apologize. I was in a hurry to try to put that together. Anyway, appreciate everyone hanging out with me on the channel. Get the Substack, kendallreport.substack.com. Probably midnight tonight when I come in to write the new one, I'll turn off the $80. So it's $8 a month regardless. It's not much for that. Get a couple trades a day. I will have the fact sheets run. That was not a good demo. Not a good time to do a live demo on the skinny, just on willy-nilly, that one. But the bottom line is, I think this week is going to be more of a consolidation. Whether we can we make a new high? Sure we can. We're not far off. You got bank results coming out on Wednesday. You got plenty of stuff to trigger things into some sort of range and try to make a run. But I think we're getting a little tired here. I'm disappointed that the database on the intermediate didn't get at least up to 58. So that was disappointing. Let me just see. And sorry, Zeke, I had to defend myself since you were calling me out. Yeah, I always think about something. I see something David Ford was saying. It, only if your leverage is at a crash. Yeah. What was the old saying? If your neighbor loses his job, it's a recession. If you lose your job, it's a depression. So, but yeah, so everything's relative to what you're doing here. Yeah, so 134 is the target there, David, on the Bitcoin. Um, Let me just see here. Yeah, so poor Zeke. Yeah, that's what a lot of people, if you say something 3 months ago, well, 3 months ago you said this. Well, you know, that was 3 months ago. Uh, so I try to do these every day, as everyone knows, and not a lot of people put themselves out like that. So uh, I I am sometimes wrong. That, but that's a good thing because everything is trade. Every trade is set up so that you have a probability of win, and you should have good structure around. And anyway, appreciate everybody watching. Thank you for everything. Um, I'm disappointed about that file not running that I grabbed. I thought I grabbed. I'm looking at what I grabbed it from. It was just some random download that I had. So anyway, I'll, I will talk to everybody soon. I'll put a snapshot out on Twitter. So if you follow me on Twitter, it's Portfolio Expert with no E in the expert. So we'll talk to you then. Look forward to seeing you guys tomorrow night. See you then.